When we talk about the student loan crisis, it can often feel like an abstract concept, a giant number thrown around on the news that's too big to truly comprehend. But what does it actually look like for the individual person, for the recent graduate, for your neighbor, or maybe even for you? What is the average student loan debt that people are carrying out there in the real world? The answer is more than just a single number. It's a story of varying degrees of financial burden, a story that changes dramatically depending on whether you got a bachelor's degree, a master's, or a PhD, and a story that has a profound impact on the economy and on the lives of millions of Americans. In this video, we're going to move beyond the headlines and look at the hard data. We'll break down the average debt per borrower, the colossal total national debt, and how these numbers break down by degree type and demographic. More importantly, we'll connect these numbers to the real-world consequences, how this debt is delaying homeownership, altering career choices, and causing immense financial stress. Understanding the scale of this problem is the first step to understanding why it is such a dominant issue in our national conversation. Let us start with the number you're most likely to hear, the average federal student loan debt per borrower. As of the most recent data, that figure hovers around $37,000. Let that number sink in for a moment. $37,000. That's more than the price of a new car. For a 22-year-old walking off the graduation stage, that is a monumental weight to carry before they've even landed their first full-time job. But this average can be misleading. Averages are skewed by people with extremely high debt loads, like doctors and lawyers. A more representative number is the median debt, which is the middle point. Half of borrowers owe more, half owe less. The median debt is closer to $20,000. This tells a more nuanced story. While many borrowers have manageable amounts, a significant portion have debt that far exceeds the average, pulling that number upward. But this is just the debt for federal loans. It doesn't even include private loan debt, which means the true financial burden for many is even higher. Now, let's zoom out to the macro level. The total outstanding student loan debt in the United States has eclipsed a mind-boggling $1.7 trillion. To put that in perspective, that's larger than the entire GDP of countries like Australia or Spain. It's the second largest category of consumer debt in the U.S., right behind mortgage debt. This isn't just a personal finance issue. It's a systemic economic issue that impacts growth, consumer spending, and wealth accumulation for an entire generation. Now, the $37,000 average tells one story, but it hides a much more complex reality. The amount of debt a graduate carries is intensely dependent on the level of degree they pursue. For borrowers with only a bachelor's degree, the average debt is typically lower, often in the range of $25,000 to $30,000. But the real debt explosion happens at the graduate level. The average debt for a master's degree recipient can easily jump into the $50,000 to $80,000 range, and for professional degrees, the numbers become astronomical. The average medical school graduate leaves with over $200,000 in debt. Law school graduates often carry between $150,000 and $200,000. This stratification is crucial to understand. The student loan crisis isn't one crisis. It's several. There's the crisis of the undergraduate with a manageable $20,000 debt but a low-paying entry-level job. And there's the crisis of the graduate student with a six-figure debt that will take decades to pay off, despite their high earning potential. Another major factor is the type of institution. Graduates of for-profit colleges often have the highest debt-to-earning ratios, meaning they took on a lot of debt for a degree that doesn't necessarily lead to a high-paying job, trapping them in a cycle of payments. Public university graduates typically have lower average debt than private nonprofit college graduates. Who is bearing the brunt of this burden? The impact is not felt equally across society. The student debt crisis disproportionately affects Black and African American borrowers due to historical wealth gaps and systemic inequalities. Black college graduates on average borrow more for their education, and because of the racial pay gap, they have a harder time paying it back after graduation. As a result, the average debt for Black borrowers is significantly higher, and they are more likely to see their loan balances grow over time due to high interest rates, even when they are making payments. Women also hold nearly two-thirds of the total student loan debt in the U.S. This is partly because more women attend and graduate from college, but it's compounded by the gender pay gap, making it harder for them to pay off their loans. This debt has real, tangible consequences that extend far beyond a monthly bill. Studies have consistently shown that high student debt delays major life milestones. It delays homeownership because debt-to-income ratios are too high to qualify for a mortgage. It delays marriage and starting a family, as couples feel financially unstable. It decimates the ability to save for retirement. As massive loan payments take precedence over contributing to a 401k IRA, this isn't just about being frugal for a few years after college. For many, it means a decades-long delay in building wealth, which has lifelong implications. The psychological toll is equally heavy, with debt being a major source of anxiety, stress, and feelings of hopelessness for millions. The average student loan debt number isn't just a statistic. It's a representation of delayed dreams, limited choices, and a significant anchor on the American economy. Before we finish, a critical disclaimer: I am not a licensed financial advisor, economist, or policy expert. The debt statistics cited in this video are based on the most recent available data from sources like the Federal Reserve and the Department of Education, but these numbers are constantly changing. This video is for educational and informational purposes only, to provide a general overview of the student debt landscape. It is not intended as financial or policy advice. The decision of how to finance an education is deeply personal and has long-term consequences. You should always conduct your own research and consider consulting with a qualified financial professional for advice tailored to your specific situation.